Good afternoon, ladies and gents. Welcome to another video brought to you by Total Control Traders. Hope everyone is having a wonderful 2022 so far. Staying safe out there, not getting chopped up by this market. Honestly, loving what the market is doing. Not making any killer profits, anything to start the year. But hey, let me show you guys what I like about the market. The red flags that we were tracking before, there are some negations in it, and it's looking decent for at least on the shorter term. We're gonna take the time to take a look at some charts, and because there's not too many requested tickers. Most of them were covered this morning. There's not too many requested tickers today, so I'm going to take this opportunity to do a deep dive, and on top of that, a deep dive for January, February 2020 to see if my thesis is in play. Anyways, let's get into it. So SPX, this is what I'm looking at. There's potential for a daily head and shoulders pattern. Left shoulder over here, head, and now we're bouncing back up with potential for a right shoulder now, decreasing bull volume and increasing bear volume after increasing bear volume. Now the key to hold is still this part. Now depending on how you track it, sorry, give me one sec, don't have my drawing tools open. Depending on how you track it, ultimately this is the neckline that must hold, which somewhat coincides with the two trend lines that we're tracking. One of the things I mentioned is in our room today, just to share with you guys here, there's 4 trend lines, and to make it a little bit more clear on what exactly we're looking at, this, where to go? There we go. This white trend line, that first trend line, is a warning trend line. That's the way. This is the way that I'm looking at my trend lines, okay? And this is to give you guys a little bit better understanding of why is there so many lower trend lines. Now with that head and shoulder pattern, the white line would be a warning line. The green line is the must hold rising wedge lower trend line, which I have to redraw, and making the previous trend line a white line, more so as a warning kind of a thing, just because of a new low that we made on the last pullback. And then the blue is a GG warning. If we lose this blue trend line, that is highly likely that we're gonna see some further downside on bearish action. The green is on the shorter term bullish action that you want to hold. Blue is gonna be a GG warning. A red, if we're to lose that red trend line. Now let's take a look at these specific trend lines. The white is warning, basically from back here. It's just a different way of drawing this lower trend line of the rising wedge. The green is the must hold, where we saw multiple bounces here. Another touch of the last pullback, so now the must hold. And the blue is this long-term lower trend line. 1, 2, 3 bounces before. So that's why it's only a warning. And then the red is that long term rejection, another rejection, support. Very key levels. Key rejection on this high, decent pullback. Key rejections on this high, very decent pullback from the pandemic. And then key rejections, decent pullback. Bounce, very significant forward moving, and then significant pullback, bouncing from this trend line again. So if we're to lose this red trend line, my anticipation would be significant downside. That's the four different trend lines we're tracking, and they will remain on top watch. Tomorrow, ideally, what we want to see is a little bit more bullish. We are trading over that daily 8, which is good, but if we're to reject from here, this could increase the potential of head and shoulders pattern. That means we gotta start potentially looking bearish. I did pick up a little bit of a hedge today, but nothing significant. We'll be looking bearish if we were to lose these 2 trend lines down here, these first 2. All right, let's do a market deep dive. We're not gonna discuss all 4 indexes. They're very much looking the same. This was a confluence zone. We're looking at the GP bounce on NAS, and that's exactly what we got. Still trading right on that 88. Yeah, so I'm going to need the follow through today, tomorrow to get over that 88. RUS significantly weaker. My goodness, there's a lot of lines in here. So RUS is significantly weaker, and we are going to be, I do believe it's going to be one of the weaker names, and we'll discuss why a little bit later. And Dow still remaining the strongest. This pattern is still holding true here. Significant pullback, slight loss of the trend line, significant pullback, slight loss of the trend line, immediate buy up, bouncing from the trend line, immediate buy up, bounce from the trend line. And now we're looking at this next higher low. And this is the next higher low, meaning that next run should be a little bit more steady without a higher low. So let's see if that happens. I'm just going to draw a pattern. So from here, let's see if we get that same kind of move. Higher low, move. Higher low, move. Yeah, that looks right. So this is what I'm looking at for Dow. It's going to remain stronger going into first half of 2022, I believe. All right, let's get into the deep dive of the market. First one is going to be US dollars. Hell yeah. Bear break on US dollars. This is great for the market bulls. Leading indicator. Long term, what is this? Weekly bull flag. What was it? Weekly bull flag now has broken bear. We are right at the lower trend line of the channel. So let's see if the bulls can hold. But ultimately, this was a gold signal for the market, in my opinion. This is a little bit of a leading indicator, so we should see bullish action coming. It might line up with the big earnings that are coming up. So there's TSM tomorrow. There's Apple coming up. There's all the majority of the big techs are coming up. So we should see some sort of reaction based on this specific leading indicator of US dollars. I do believe it's going to be bullish market from those earnings. Now, based on this as well, the US 10 years, we did see big bull break into new 52-week high. Yeah, new 52-week high, immediate backtest of this trend line so far. If we were to look at the daily here, so there's multiple bounces from here. Once we lost it, it was immediate backtest, and then backtest again, slowly coming back up, regained it, and we saw multiple bounces on this again. This is a very, very significant trend line on US 10 years. This specific trend line, that's why we only have one trend line. The other ones don't really matter as much. You're not going to draw, you could say, you could draw a trend line like something like this. That would be the money line. Maybe a bit lower. Look at that. Double bounces. So that would be the money line, but this is a very significant middle trend line. And head and shoulders, no follow through. Huge bullish action, immediate back test. And we are seeing some after hours bullish action on US 10-year yield. Again, I am going to take time on a little bit more nitty gritties, the smaller details of the market, as well as the correlations, just because, hey, why not? Welcome to our newest annual member, John. Welcome to our group. A lot of people mistake US 10-year yield. Maybe I'm mistaken. Hey, if someone can correct me, that would be great. A lot of people think that US 10-year yield is a positive correlation to the market. Sorry, a negative correlation to the market as a leading indicator. So when the US 10-year goes bullish, that means the market will go bearish. That's what a lot of people think. But if you actually look at the terminologies, US 10-year yield goes up when, oh man, this is confusing as hell. Goes up when interest goes down. Interest goes down means bond market prices go up. Nope, that's not right. I'll explain. Let's take a look at this. Bond yield versus stock market. Okay, easiest. Growth stock selling in the stock market leads to higher bond prices and lower yields. So With higher yields means lower bond prices means higher stock market. To put it simply, okay, lower, and then there's also another one in there. You know, higher yields, lower bond prices, higher bond interest rate. Anyways, so the simple term is lower yields means higher bond prices, generally means selling in the stock market. What's the other way around? Stock market leads to higher bond prices. But we didn't really see a sell, did we? Anyways, I'm gonna do so far it hasn't failed me yet. As long if someone can explain for me how this works, that'd be great. It's always been one of the most confusing as hell for majority of us, and I think majority think that it's as mentioned, a negative correlation, but it's actually a positive the way I'm looking at it. So anyway, so with the bond, it is going a bull break on lack of follow through on head and shoulders. So this to me looks great for the market bulls. VIX, we did see that bounce, but no repeat. So now this also leaves me a little bit more bullish on the market as well. This is the pattern that we were tracking before. Wedge, bull break, riding along that upper trend line before an actual pop. Now wedge, bull break, riding along that upper trend line. There's been 2 minimal pops already, but there has been no actual pop. The actual pop would be confirmed on the break above, or break and close above, let's say that, roughly 30, 31-ish. With VIX, I do like where the chart is at still. As long as it touches that lower, one of those lower upper trend lines, we'll be looking at hedging or increasing hedging. VIX is still looking bullish for the market. All right, next is gold. Gold is slowly rising up. It's no head and shoulder pattern because this is already broken bear, but it was immediately bought up. No inverse head and shoulders either. It's just riding along this trend line. And the major resistance trend line, major upper trend line over here is coming up. 1, 2, 3, 4. 4 rejection from this upper trend line already. If we were to slowly grind up, there is a decent chance that we can actually see a bull break on gold. So that would be a little bit concerning for the market bulls. But aside from that, the leading indicators, in my opinion, are not lined up 100% for bulls to be concerned or for bears to be in full sizing. So we will continue to play the market as the way it is until significant drop, which would be this lower trend lines, these first 2 that we're looking at, and then adding into one of these lower trend line breaks, the other 2. All right, so that's it for the market. I am going to do a deeper dive just to confirm the theories from back here. So this is February 20th, January. So let's do beginning of 2020. Just want to see what the charts look like. So US dollars. So this was a warning sign for the market, 3%. That's a very significant, a very decent move on a relatively short period of time. Was it March 9th that the market bottomed out? It was March 23rd. So it did pull back with the market on the consolidation day. And then halfway through, it popped up, topping out right at when the market bottomed out. So technically, you could call this whole thing as a move. It is a warning sign. So it does make sense. And you can see leading up to it, a whole year, 2 years, 2 years beforehand, it has been bullish. So we are seeing that potential again. trend is very clearly reversed on the daily chart. Now bullish on US dollars. Yeah. All right, let's take a look at US 10 years. March, so that was the bottom. What about leading up to it? That's why I am wondering. Leading up to it, December, big drop. February, and then another big drop. 20th was the beginning of the, so it dropped along with the market. Bottomed out 9th. How come I can't remember the day that bottomed? 23rd, wasn't it? Yeah, 23rd. So it bottomed out before the market did. So it is a leading indicator. Yeah, to me that makes sense. So, you know, US 10-year, big drop, and then essentially a bear break. Let's take a look at this. 18, so this was 105, 20th. Yeah, so bear break, and then that's when the market started tanking. This makes sense. It is leading indicator with positive correlation. Even depending on how far, you know, leading you're looking at. In this case, if we're to be exact, October versus February, you could say it's 4 months out. This was the warning sign for the market. That doesn't really make sense to me. But regardless, I do believe it's a leading positive correlation indicator on US 10 years. Now let's take a look at VIX. Oh, so this is when. Okay, so 1 month before a sideways action, it popped up a month before market crash or market correction on pandemic, and then started really popping 3 days into the market correction. 20th, 21st, and then the 24th, that over that weekend. Let's take a look at the market here. So 20th, 21st. So 24th was the first significant drop of 3.72%, and then VIX really popped from there. Yeah, so still leading indicator. It did pop beforehand. Just confirming theories here. Every now and then, you know, when you've been trading for some time, especially in this kind of choppy market, you know, it's good to redo your homework to make sure that your theories, your thesis are still correct and they do still work. So gold looks like to be a much further ahead leading indicator. The bulls started buying this up way before a while. Depending on how you look at it, you could say, I would probably call this the significant buy. And this was June 2020. Am I looking at the wrong thing? We are. Sorry. March. There we go. So the significant buy up would have been December. 2 months ahead. December 1557 bull break in January, and daily bull flag continuation in February. Beginning of February again popped, topping out mid-March. Significant drop onto the 23rd. Yep, still leading indicator. Huge sell on gold. And when you look at this, you know, this is very, very interesting in the sense that if you mark this support resistance, you can see they started running it from that support resistance November, December. This is basing out accumulation zone, and then they started running it, and look where they sold it off to. So after the market corrected, and once they started anticipating bullish market coming in, a week a week, 2 week ahead of time. So gold seemed to be 2 week ahead. 2 weeks ahead of time, they started selling it, bottoming out basically a day before the market started bouncing. Love it. Okay. Yeah. So overall, right now, there's no major red flags on the market. Now let's get into some hot tickers. I do apologize for taking so long. Wanted to share some insights on how I look at the market, what the correlations are, how I derive from those correlations, and how I got to those correlations in the first place, and how I look at the charts. So hopefully you guys find that a little bit helpful if that's something that interests you. If not, hey, start the video and maybe I'll edit the video at the beginning. Skip the first 20 minutes of the video if that's not something that interests you. Hey, anyways, let's get into the hottest stickers. First one is going to be Tesla. So I'm looking at Tesla as discussed in this morning's video. This is a little bit of a messy chart. What is this? Okay, yeah, don't need that. Little bit of a messy chart, but what I'm looking at here, long term, we're looking at 1, 2, 3, 4, 5, a very clear pattern that has played out already. Now, based on this correction so far, this is looking like there is a potential for an extended run on this leg 5. And what that means is we can see a continuation because we are not seeing any decent ABC corrections after a leg 1, 2, 3, 4, 5 run. There we go. Yeah, so we're not seeing a very clear ABC correction. You could maybe call this ABC correction, but I do believe this on this kind of this magnitude of run, you should see a very much more significant ABC correction. As of right now, we are seeing a flat correction, so we could see another leg up before topping out. However, looking at this chart, looking at the monthly chart, what we discussed this morning on the monthly chart is we are extended. We were extended, not so much now, but there is a monthly bull flag and decreasing bear volume so far. Earnings is coming up. That should dictate some direction, at least the short-term wise. And based on this, I am anticipating sideways action for at least another 2 months before an actual trend, whether that's bullish or bearish. Keep an eye out. So this would not be something that's going to be on my daily top watch. It is always going to remain on my top chart, but not going to be looking for immediate trades or anything like that on Tesla for the next little while at least. All right, next one is Lucid. Hot ticker. Potential reversal candle today, spinning top kind of candle. After ours is down a little bit. This was an amazing trade so far. We got in at 36. It wasn't from back here. It wasn't from this day either. It was from this day, somewhere around one of these 2 days. So we got in at 36, and then we didn't take profit here. I was looking at it. There's potential for a rejection, but hey, I'm looking at this for a long term. You know, with this GP bounce, it lost the GP reversal slightly, but immediate buy up, huge buy up, hammer kind of reversal candle. Continuation on increasing volume the next day. A little bit of a sideways action forming that 4-hour bull flag right here. 4-hour bull flag confirming today. There is no significant red flag on Lucid yet. Easy stop, just place it under. With the way it stands now, I would actually place it under 36. I do not want to see a loss of 36 again. And that's based on can't really tell. Is there a daily bull divergence? Yeah. I guess depending on how you draw it, there's not really a daily bull divergence. No. Yeah, so the spinning candle, come back. I want to see a daily higher low. This. Now, please mark this as a daily trend reversal. I love the chart. Love what it's doing. Daily trend reversal, new highs. Let's see that. If we get follow through tomorrow, let's see that daily higher low. Maybe give us an opportunity to add a little bit more. Fib wise is not lining up with support resistance. Maybe we ideally we want to see maybe a little bit more run. Let's see what this looks like actually. If we were to run over into the confluence of resistance and potential upper trend line. That would make a little bit more sense. So I can see this chart continue to run over here over the next few days into next week before a pullback lining at 0.5, lining up with this support resistance. Not much of a support, to be honest. 1-2 supports maybe, but 41.60 would be the ideal entry for if we're to get a higher low. As the way it stands right now, not really confluence areas. We don't really want to see a pullback from here. Should see continuation. Bulls need to step it up. Come on, we've been waiting for this for some time. So Lucid, next one is TSM. Earnings tomorrow. Very clear bullish action today on increasing bull volume. The thing I don't like about the chart is there's gap left behind. And look at the last time it did it. So it did a daily bull flag confirmation, gap up continuation again, and then it came straight back down. It didn't fill this gap from back here, but I'm not too worried about this one. I'm more so on the shorter term worried about the gap left behind from today. Because if we look at this long term, you know, this is a trend line that we were tracking before. Breakout, fake out, coming back down, and then we finally broke immediate back test. We should see higher prices to come, but based on the daily chart, it makes sense if tomorrow what they would do is, whether it's opening up or whatever, whichever, profit taking, you know, gap fill before actual running up. So the candle would be wick from the downside kind of a thing. So this makes sense to me, makes the most sense to me actually. Immediate backtest already. Let's see higher prices. Ultimately on the longer time frame, I will be looking bullish on TSM. Taiwan Semiconductor. Next one is BA. Alright, BA finally getting that bullish break from that long-term descending wedge upper trend line. Lots of fake outs before. So we're taking this a little bit slower. What I want to see is, let's see if there's fake out from here. There is, as mentioned before, there is lots and lots of room to move on BA. Not gonna be, especially where we are in the chart, don't want to be buying a reversal candle from here. There is a potential for reversal candle today, but it is daily increasing bull volume. Earnings is coming up as well on January 26th. Maybe that will give us the higher low. So ultimately, this is one move. We want to see a clear daily higher low. These are 4-hour, 8-hour, 1-hour higher lows, not dailies. Let's see that daily higher low. Let's see where it sets in at, and then give us that move. So most ideal will be something like TSM, you know, daily bull flag and continuation. So that's BA. Next one is F. Ford. Weekly bull flag confirmation into daily bull flag now. So this was the weekly bull flag confirmed, and now we're having a little bit of a stall. I like how strong the chart is though. So on the daily, after this kind of gap and run, we are seeing a daily bull flag. Today, we didn't even touch that daily 8. This is a strong chart. And January 27th is the earnings. Looks like, so anticipation for January earnings generally is expect sideways action until those earnings are out. A lot of times, beginning of the year, end of the year earnings, the major earnings, you tend to see sideways action for the 2 to 3 weeks beforehand. And I think that's exactly what's happening here. But ultimately with Ford, the way the chart's set up, I do believe higher prices should come. On the monthly chart is a little bit concerning. If you look at the monthly chart, we are pretty darn extended on the monthly chart. Last most ideal entry was 1238. Monthly 8 touch, boom. Now it's already double from that. Anyway, so Ford is one of the hottest stickers. Just be careful on the monthly. Don't want to get screwed on catching the top. And this is looking, monthly is overbought. Once this flips bear, hey, I think there's gonna be some decent bearish opportunities on Ford. I think we blasted. Let's see if we can find a potential top. Okay, yeah, so we blasted through the so is that why we were stalling before? That is why we were stalling before. Wow. This pop tricked a lot of people, including myself. I only did common shares, but oh my god. So this was the trend line that tricked a lot of people. Anyways, so looking at this, if we're to find a temporary top, might be a bit hard, but let's see how this looks. Would you look at that? A rejection, another one, somewhat of a support, more like a chop around, rejection and rejection again. So there is potential for this kind of candle followed by some choppy action before an actual bearish. This, ooh, be careful. This is let's call this the must hold. If we're to see for the rest of the month, we're to see a decent pullback on Ford, losing this trend line, fake out. Yeah, there can be some decent short opportunities coming up. Way overbought. You know what? I'm gonna this is what I'm gonna do. I'm gonna instead of having my alert up above, I'm going to do a strangle here and put an additional alert on this trend line. So in the case that does break bear, actually if it does break, yeah, if it does break bull, I'll probably still play bearish. And if it does break bear from this trend line, I'll still play bearish. Looking bearish on Ford. Way overbought. Look at the RSI. There's only been one time. Huge volume. There's only been 2 other times that it's been this high. Once was back here, which essentially you saw higher prices come before a huge drop. So it could take a long time for this bear play to work out, or it could be like this, where overbought, further upside price action before coming back down. Yeah. So not gonna short this too early. We're gonna watch for the key levels to be lost first. Ford, liking it as a short play. Quite interesting. Next one is QQQ over IWM. So this one is QQQ over IWM, which is NAS versus RUS. NAS divided by RUS, meaning the stronger the chart, the higher the chart is. The stronger NAS, the higher the chart is going to move. And we've seen multiple reactions to this trend line. Yet again, we are seeing this trend line again. We sold down below, immediately bought up, gap down below, immediately bought up. And from here, I would anticipate further bullish action on NAS versus RUS going forward. Target remaining at 1.88. This is actually a very bullish sign because daily bearish divergence played out, but lack of follow through, immediate buy up, saving this trend line. Would anticipate higher prices to come on NAS versus RUS. Now the other one that's very interesting is because we are noticing sector rotation into Dow, so I'm gonna start paying attention to QQQ over DIA. And one thing I noticed when I compare the chart that's very interesting is, let me find the picture here. All right, so this is the picture I shared as I was doing, just drawing a new chart. Look at QQQ over QQQ over DIA. Yeah, DIA. QQQ over DIA versus QQQ over IWM. This is QQQ over IWM double top, and we talked about it rigorously back then that we're gonna see a pullback, meaning RUS should see relative strength and NAS will be a little bit weaker. That's exactly what we saw. And from here, what are we seeing here? Another double top, big upper wicks. Oh no, not upper wicks. Yeah, rejecting from double top, no upper wicks. So rejecting from double top, and based on if history was to repeat itself, what we're looking at comparing to QQQ over IWM, this is what we can anticipate. A pullback to roughly just above the upper triangle of a previous channel, just around that 0.5. We did lose the 0.5 from back here before another bounce up, meaning DIA, Dow Jones, going forward should see relative strength versus NAS. Something to note, something to make sure it dictates where our focus should be, and this is why we're gonna potentially start discussing Dow 30 tickers a little bit more versus growth or NAS. NAS is always going to remain on top watch, Apple, Tesla, Amazon, but just something to be aware. Dow, I am looking a little bit more bullish on it going forward, especially with that rotation that's been very noticeable more and more frequently recently. Okay, so that's two main I wanted to discuss. A couple other tickers. Let's see, Apple. Actually, I haven't taken a look at Apple daily for quite some time. Chop chop. That's 8 hours. Whew, weekly bull flag. And Apple is trading on Dow. So next week. Tomorrow's Friday, right? Yeah. So tomorrow and going into next week, if we're to see continuous strength, I would anticipate new all-time high. Target is still remaining at 193.49. That has not changed. We have not hit it. It's just a little bit of choppy sideways action on the weekly bull flag. So let's see if we get that follow through this week and going into next week. Apple, really like the setup. RBLX, I do believe there's some bullish action coming into RBLX. Yeah. Roblox. Interestingly, I checked out the app. Wanted to see what the hype is about. Now, this was a perfect trade, which I completely missed because I did not have an alert set. Whew. But you look at this now from back here. We've been watching this ever since the pullback, I think somewhere over here, and then rejected again, very clear upper trend line. And after this rejection, I'm thinking, okay, most ideal entry will be that gap fill. That gap fill is at 79.02. Look at where we bounced from, 79.02. Please tell me some of you caught it. Amazing play to the penny. RBLX, we are seeing bullish action, bounce from that gap fill, but I do believe on the shorter term, there may be a little bit more bearish action coming in because we look at this is a decreasing bull volume, nothing significant. This is just a bounce, and we are seeing a daily 8 rejection already. So tomorrow, if we're to see increasing bear volume, I would anticipate a lower price to come. But RBLX, if you're looking to play bullish, wait until this upper trend line is broken. Nothing up until before then. Okay, so that's Roblox. Next one is RIVN. Have not taken a look at this for a long time. RIVN. There's very big hype about this name. Would you look at that chart? Wow. Gap down, gap fill, double top, rejection. Whew. Looking like a potential trend reversal soon. Well, actually, not for quite a while. So there's two ways you can play this. This is a decreasing bull volume right now. You could set an first entry on the break above 89. Maybe just make a whole number of psychological resistance and $90. But looking at the chart, I would feel a lot safer on the break above this previous support resistance of 106.75. What I can see this chart doing is, because we're not oversold yet, is making a lower high, that previous support resistance, coming back down to make a new low before going back up again. So if that's the case, then I will remove my alert down. But as of right now, I feel a lot safer keeping it at 106.75. One of the new rules for myself 2022 is not to trade into weaker names, relatively downtrend kind of names. So if we're looking at this, actually I just noticed something here. Maybe that's a bit too high. It's going to be a little bit harder to draw, but let's see if it works out. Oh. I like it down here. So 2 rejections from that upper trend line. If we go a bit lower, this might work out even better. Okay, we're gonna keep it at that. Yeah, 2 rejections from this upper trend line, 4 bounces from this lower trend line. So what I can see is another touch forming. We're gonna need that daily bull divergence. RIVN. Upper. Wow. Just right to that upper trend line. Anyways, forward we talked about DWAC. I'll do 3 more tickers. Yeah, to keep the timeline in check. So DWAC, very notable bullish action versus the market. This is a strong chart on the break yesterday. Now, Monday was a very significant bull volume. If you look at this, low bull volumes all the way. And the Monday was a significant bull volume. But then it was gap down, sell off, inside bar kind of day. Next day, gap down, buy up. But the key was yesterday on the break of generally on this kind of confluence trend lines. This lower trend line, we're seeing multiple supports, including another rejection as well. And this upper trend line, we have seen multiple rejections, 3 rejections. And on this kind of confluence area, generally on the move up there, you should see some sort of reaction. But no, DWAC just decided to blast straight through it. That was the go signal, and we saw follow through today on slightly increasing bull volume, closing near the high of day. I do believe higher prices are to come for DWAC, especially on the break of this next resistance, 77.50. What I can see happening, and that will make a little bit more sense instead of blasting straight through that resistance. Man, this chart is hard to navigate. Is pop, rejection, daily higher low before an actual move. So DWAC, this will make a lot more sense to me. Cool the chart off a little bit, maybe not as much, but we want to see that back test of the trend line for a safer longer term play. Looking at this hourly, it did get immediate back test. Yeah, it did get immediate back test on this hourly. So DWAC is looking good on continuation. And next one is SE. C Limited. A lot of bottom fishing. People wanting to play bottom fishing on SE. C Limited, I think I've gotten like multiple requests on covering it already. It's not something I would personally watch too often, but what I would look for on a reversal play is confluence areas. The most ideal that's standing out to me is this overall GP, because we did lose that 0.5 already. Speaking of which, let's remove that. So it'll be around this GP lining up with a key zone down below at about 160, I want to say 157-ish. That would be the most ideal bottom fish first entry. We are trading over that 88 now, but simply because of the gap up and we are seeing sell off. There is a strong daily bull divergence as way it stands right now. Strong daily bull divergence. But we're going to need to see that follow through. We have seen way too many strong daily bull divergence that does not get follow through lately. So be careful if you're playing this. I can't see this rejecting from the key zone, coming back down for a final leg before a pop-up. That would be the most ideal for a bullish reversal play. Next one is PLTR. Hot ticker. Hey, this used to be covered every single day. And then what happened? And we stopped covering it ever since this bear break on the head and shoulders that we were talking about. So, hey, I hope someone shorted. Tell me someone shorted this. Oh my goodness. Look at this. Head and shoulders pattern. We talked about this. Neckline. A key break. It was a gap down sell off. This is very clear. Gap down sell off. Daily bear flag and continuation. Even if you did play it late. Let's say you play it late on this confirmation here. All the way down 30%. Say you didn't nail the bottom, 20%. That's still very nice profit. If you're doing puts on this, you'd be looking at minimum 200% return, I believe, depending on what put strike date and expiry you played. But regardless, what I'm looking at here now is this short-term trend line. There's not too many clear trend lines up here. Short-term upper trend line here, rejection, another 2 rejections here, and we did see another rejection today. So let's see if we get that follow through on daily bull divergence. It's not that strong. It's not that strong of a daily bull divergence, but there's potential. We are still trading on the daily 8. Ultimately, same idea. I would feel a lot safer if we were to be trading over the daily 8 as well as this short-term trend line. So yeah, that's it for today's video. Hope you guys enjoy the content. Hey, if you know anyone who may benefit from the videos we share, please consider sharing our channel with them. Thank you again for all your support through 2021. We have now reached the 1-year mark on our YouTube channel. Thank you, everyone. Thank you, all 420 subscribers of you. I look forward to having you through our journey for 2022. Let's kill it, guys. All right. See you in the next video.